Being able to correctly identify daily bias will either make or break your trading. And you're probably making a few fatal mistakes that is compromising your setup, so let me help you. I've been trading ICT concepts and trading daily bias for the last 3 years now, and has made me over $500,000 in the last 3 years as a futures trader. In this video, I'm gonna explain daily bias as simple as I can so that you guys can immediately start applying it to your trading the right way. Let's get into it. So the first thing before we even get into any concepts is you have to understand why that these concepts even work. When we're looking at a daily bias, what is that daily bias even supposed to do? Why is it supposed to do that? Because that is what's going to actually truly build the conviction and the confidence when you're trading, is when you can actually understand and have confidence with why the market should move. So before we get into it, I want you guys to understand there's 4 reasons why markets move. Number 1, markets move to hunt liquidity. Number 2, markets move to rebalance inefficiencies, which are fair value gaps. We rebalance to equilibrium, and we generate liquidity. Now, our goal when we are finding a daily bias is our goal is to find where the daily candle is expanding to. That is the question that we want to ask. Where is the daily candle expanding to? Now, there's times in which the daily candle expansion won't be as clear as what we normally would expect it to see. And we're going to go over that in this video as well, about going into the lower time frames and finding a daily bias through the lower time frames as well. But this is the most important thing. Recognize 4 reasons why markets move. Every trade that you take, every reason for your entry needs to have these as the foundation. If you are taking a trade, one of these should be the reason for why you are taking them. You are either hunting liquidity, you are targeting price to rebalance to an inefficiency, you are targeting for price to rebalance to equilibrium. Keep that in mind. So let's jump into the charts now. So what I'm going to do is I'm going to do a replay system on TradingView, and I'm just going to pick a random point in time, scrunch up the chart so you guys know I'm not cheating, and we could go from there and talk about daily bias. So the first thing that we're going to do when it comes to daily bias is we want to do just a simple top-down analysis. Start at the weekly time frame, draw our buy side, sell side, where's the market drawing towards, and do we think on the bigger time frame, and then slowly work down to figure out the internal draw as well. So we're going to go over here. I'm going to go to the weekly time frame, and I'm going to say, hey, buy side to the left of us just got taken. So this could possibly be something that's bearish, but one thing that you have to keep in mind as well is once this buy side level gets taken, the only way for me to be bearish and for me to think that price is going back to these areas is for us to get displacement through a swing low. This move here does not mean anything. We could immediately reverse back higher because this daily fair value gap to the left of us is still continuing to hold bullish order flow, right? So keep that in mind. Now let's zoom into the daily. And looking at this chart, I want you to just take 5 seconds and just have an overall idea. Do you think that market right now is bullish, or do you think we are bearish? Take the next couple seconds. Now, looking at this chart for me, I would be extremely bullish. Now, why is that? Market ended up coming up, had some accumulation. At these highs, we're continuing to generate buy-side liquidity. We have relative equal highs, as well as all of these swing highs that we leave along the way to the downside. We end up selling. These internal lows get taken. Sell side has now been taken, as well as we are holding the daily fair value gap. So again, any move that you see in the market, there's a reason for why it's happening. Again, there's 4 reasons why markets move. What are we doing here? Well, when we sell off, we're going to hunt some form of sell side liquidity. We're also rebalancing to an inefficiency on the bigger time frame. Now, once those have both happened and we hold the order flow, meaning we are holding the bigger time frame fair value gap, there's not displacement on the bigger time frame, so there's no reason for us to be bearish after the buy side was taken. So now I'm looking at this internal price action, and this is when you start applying other concepts from ICT, like market maker models, which I'll leave in the description that you can go check out. Because the way that I'm going to look at view at this is just by looking at the daily, I'm going to be expecting buy side of the curve when it comes to a market maker model. And we're going to start to work our way up to this buy side level. So now, have a good understanding. We're on a daily. So now my goal is to find out where is the daily candle expanding to. So now, first thing I'm going to look at is sell side been taken. We had to move up, rebalance, and then we're starting to actually displace through this swing high. So now I'm extremely bullish. And what I want to notice is there's 2 fair value gaps here. There's a daily fair value gap right here, and there's also a daily fair value gap right here that we are currently in. So now, what am I expecting? Well, I'm expecting internal range to external range, meaning this imbalance most likely holds, and we see an expansion towards the external draw, which is going to be buy side. So now, what I want to do is I want to zoom in. First thing I'm going to do is I want to notice where is price most likely to bounce. So if I'm going into a day, and this is what I'm looking at on a 4-hour, and I say, okay, my daily bias is bullish because I think on the bigger time frame we're expanding to this high, but what has to happen first before that can happen? Well, currently we just had a big expansion move. There's a possibility for us to retrace. We have a 4-hour fair value gap right here. We could come back down to this and then continue higher. I need to see more internal price action to recognize when price wants to move, because that's the most important thing when it comes to daily bias. It doesn't matter if you have a bias. It doesn't matter if you're bullish or if you're bearish. It matters when the market is actually going to go draw towards those areas. So when I'm looking at a 4-hour, I want to wait to see how price reacts. So we zoom in and I can say, hey, this looks really, really nice. This daily fair value gap is continuing to hold bullish. We just came down and swept this recent low to the left of us. And again, I'm doing the exact same thing as I normally would. We got nice displacement, pull back to a fair value gap. If this continues to hold, I could expect to see a move up. So now I'm aligning the external draw with the internal draw. I want to make this clear that you understand this. When I zoom out to the daily, I'm recognizing, number one, this overall model is extremely bullish. Sell side has been taken. The bigger time frame fair value gap has held bullish. We're bouncing to the upside. We've had displacement through this swing high. And now this daily fair value gap is starting to hold. So what do I expect? I expect internal range to external range, meaning this fair value gap holds and we work our way back to the upside in favor of the external draw being buy side. So when we zoom in and we have a daily bias being bullish, I'm looking for a bullish entry model. What do I need to see to be bullish? The exact same thing. I want to recognize manipulation. Where's sell side resting? Where's the displacement happening? So what happens is sell side to the left of us gets taken. We get a lot of displacement back inside that range. We pull back to this inefficiency, back to equilibrium. What do I expect to see here? I expect to see this fair value gap continue to hold bullish and to see an expansion to the upside. Now this is currently in the overnight session. New York doesn't open until later. I'm going to go to a bigger time frame so we can actually see more of what's going on. Fair value gap still continues to hold. Should see an expansion to the high. There you go. So, but hopefully you're starting to connect the dots when it comes to aligning the internal draw with the external draw, and it comes to finding the daily bias. So now I'm going to continue to let the market play out, and let's just continue to figure out what to do, right? So now, new day happens, right? Boom, new day opens. I'm going to say, okay, I'm going to actually go, let's say I'm going to close my eyes, 1, 2, 3, 4, 5. Okay, 5 candles, boom. New bias, new day. What's my daily bias? Okay, well, buy side just got taken. So now I want to be hesitant to be taking longs because most of the time we're probably going to be having less efficient price action when the buy side is taken. Why do you think that is? It's because there's no reason for price to move higher now. When we are in this range, we are drawing towards areas of liquidity, right? The 4 reasons why markets move. We're either hunting liquidity, rebalancing the inefficiencies, rebalancing the equilibrium, right? Or generating liquidity. What do you think we were doing right here? This is generating liquidity. When we zoom out, on the way to the downside, we are generating all of this buy side liquidity. All of these resting highs that we leave along the way to the downside is areas of buy side liquidity that we are going to eventually come back to and run all at once. That is the reason why it's called low resistance liquidity run, because when we come back to it, we run it all at once. It's not like we take one little high and then sell back off. We take all of it at once. Now, daily bias, boom. This is what we're looking at. So now, first thing I want to notice is if the daily doesn't give me a good understanding of where we want to expand to. Right now, when I look at this, it doesn't give me a good idea of where we want to expand to because we've already held the daily fair value gap. We've kind of gone some momentum to the upside, but now this candle's starting to, figure out what it wants to do. So this is when I zoom in and I recognize what the internal price action looks like. So now I go to a 1 hour and I'm going to say, okay, I want to mark my important levels here, right? I want to mark, okay, big sell side level down here. We have internal low here. And this is when I'd also start paying attention more to ES because a lot of the SMTs that are going to start forming in this range are going to be an easy sign to recognize for manipulation. So now my goal is to wait for price to become clear. Now, I want to preface this so much. You will not know what the market wants to do every second of the day. You will not know what the market wants to do 24/7 because guess what? You shouldn't know what the market wants to do 24/7 because the market is not constantly offering high quality opportunity. There's times in which I'll come into the market and I'll say, I have no idea what the market wants to do right now. And that's totally fine. Your goal is to wait for price action to give you more structure and give you a better understanding of when price wants to move and why price wants to move. So always wait. If it's not dumb clear, don't take it. Don't start contemplating whether the bias is right or wrong. It will be right when you see it and you'll know that you have the confidence to do so. So this is kind of one of those cases where there's not much for me to look at in terms of where I think the market's going to expand to. Now, what do I think the market's going to do? I think we're going to most likely take this recent high and start to expand back to go take these recent lows. But it's not clear enough for me to possibly, again, take a setup off of. So right now, it's simply letting price action play out. I go to a 50-minute, and let's see what happens. And let's see if we get a better understanding of what price wants to do here. We continue to expand to the upside. Again, just letting price action do its thing here. I'm not focused on trying to catch this move. I'm not focused on missing out on a setup because guess what? There is no opportunity given to me and there's no reason I should be taking a trade. My goal when I come into the market is building good habits, not making money. When I come into the market and let's say there's just this random move to the upside, and this is what a lot of you new traders do, and I used to have the same problem, is the market will open, you'll see a massive move to the upside or the downside, whatever it is, and this doesn't even have to be a market open, this is just throughout the day. You see a massive move and immediately say, oh, I should have taken that. Oh, I should have taken that. Motherfucker, no, you should not have taken that, okay? Because guess what? The opportunity to actually enter that trade, the setup itself was never presented. So you're looking at the outcome saying, oh, I should have taken the setup because you would have made money on it. And that's because you're in the mindset of being profit focused instead of process focused. And this is what holds so many traders back. Is you care more making money the wrong way than actually doing what you need to be doing and setting yourself up to make money the correct way and consistently. So little rant right there. Let's get back to the bias. So now market has provided me more information now. Why? Why is the market provided me more information now? Because we have generated sell side liquidity. So one thing I'm going to recognize, I'm going to zoom back out, 4-hour time frame. What do we want to do here? Well, I'm most likely expecting, like I said, to go take the sell side that we generated. What are the 4 reasons why markets move? Hunt liquidity, rebalance to inefficiencies, rebalance to equilibrium, and generate liquidity. When market comes back down here, I get a lot of questions like, Justin, why did we not take sell side here? You ever been in the market and there's times where we'll get super close to buy side or super close to a low and not take it? It's because market is continuing to generate buy side or sell side liquidity. When we do those, we should expect price to most of the time go and revisit those lows because it's consistent generated liquidity. And that's the case with this model. We now have generated sell side liquidity. What's happening up here? Recent high is taken. We have a big fair value gap here, as well as a 1-hour fair value gap. This is where you can possibly look for a short entry. Why is that? We've had manipulation. We've had displacement back inside the range, pull back to the inefficiency. What is the market doing? We're targeting sell side liquidity. Where is the daily candle expanding to? We fail to run up higher. We get displacement. We expect the daily candle to expand back down. So what do I expect this to be? When market comes down, rebalances, and comes back up to take this high, would expect this to become an internal soup. And this could be a possible shorting opportunity to target these lows here. And this is when I would expect to see sell side of the curve. So let's do it again. Boom. Zoom back out. New day. So going to the daily. What's my bias? We're back in the daily fair value gap. So now I'm questioning, okay, do we want to expand to this low? Because we just took internal liquidity. So right now, I'm probably going to be more bullish because we just swept these relative equal lows, right? We just swept these relative equal lows. I'm probably going to be more bullish. What would I expect price to do here? Well, if sell side's taken and we start to displace back inside this range, first thing I would expect to do is if I'm not confident with we're going all the way back to buy side, I'm at least pretty confident we're going to go back to equilibrium because what's 4 reasons why markets move? One of them is to move back to equilibrium. So this is an area in which I'm expecting price to most likely rebalance to if we get displacement above back inside this range. So do we? I'm watching. There we go. That's a little bit. But now I'd zoom in and I try to recognize the model. Is there manipulation? Is there displacement through a swing high? Again, this is where the market will most likely run back to. And again, this is in the overnight session anyway, so I wouldn't be trading this. All right, here we go. Hold on. Market's about to open. Let's trade this. Okay. So market's about to open. My bias, bullish. Where am I expecting price to go? Equilibrium first. Also these imbalances. So zoom back out. 15-minute. What am I noticing? Where could I expect morning manipulation? Boom, equal lows here. What's another thing that's happening here? Imbalance to the left of us. Probably another imbalance on the 30-minute as well. There you go. What would I want to see going into the morning? I want to see a sell-off, go take those lows, have manipulation, and expand back to the upside. Let's digest this for a second. Why is that? When we zoom out and we look at our bias, sell side's taken, we get displacement back inside the range. Everything that's needed to happen to the downside has happened. What do we expect to see? We expect price to start rebalancing to equilibrium, rebalancing to these inefficiencies, and probably going to see new highs. So going into the morning, I'm recognizing saying, hey, we displaced back inside this range, we retraced, and we just now had our market structure shift. So if we had a market structure shift, what would I expect? I'll pull back to fair value gap, continue higher. I zoom in once again. Where are the areas of liquidity in which I expect to see the manipulation? Sell side here, this is what I would want to see. Market come down, take this low, continue to the upside. So 920, one more candle, wait for it, waiting. Does it happen? Does it happen? Again, it could not. So in this case, there was no entry. At least in my opinion, I would have waited for these lows to be taken unless there was an SMT. So if we go to ES and there was an SMT here, that would have been a fine trade. But I would have liked to see these lows get taken and then go to the upside. So for me, there wouldn't be a trade, and that would be totally fine. And you have to recognize there's going to be times when the market is going to give you opportunity, and there's going to be times when the market won't give you opportunity. And I want to preface this. You are not a trader. You are not a person. You are not a personality. You are nothing. You are simply an observer. A trader means you are an observer. That is it. Your goal is to observe price action. Don't let your ego get in the way and say, oh, I'm right all the time, I want to make money. All of these thoughts that you have in your head are holding you back. Your goal is to simply watch price action and make a decision based off of risk. When I see a setup like this, anytime that I see a setup that I end up taking or I don't take because let's say the entry was not given, I don't sit there and whine about it. I don't sit there and enter in late and FOMO into the position and then ruin my risk and then blow up my account. Because guess what? I've done that before. Years ago. Years and years and years. So the first thing that's happened in which we expected to see is back to equilibrium, a lot of displacement back inside the range. Where would I expect the market to draw towards? Probably this recent high. So let's see if there's possibly another opportunity later on, and we'll play the next day out. So 4-hour opens, boom. First thing I want to say, start on the bigger time frame. Where is the daily candle? Where is the market expanding towards? This is where we're expanding towards. Buy side. Why is it buy side? Sell side taken, displacement back inside the range. Overall order flow is bullish. This daily fair value gap continues to hold. There's no reason we should be fighting it. So what would I want to see? Big time frame fair value gap. I want to see us come back into this fair value gap. I want to see us take a recent low. Recent low just got taken. I want to see us expand to the upside. And what do we expect to see here? We expect this fair value gap to continue to hold bullish and to see an expansion to the upside. Now, again, let's wait till market open and see if there's any actual possible trades. 9:30 right here. So, market opens, buy side, zooming in the 5-minute. What would I expect to see here? Probably a straight run up to the buy side. There you go, straight run up to buy side, and it's pretty efficient. Overlapping the internal bias with the external bias. I know that video was a little bit of a yap session when it comes to specific things, but I'm hoping you guys enjoyed the video. I have another ICT video breaking down how I was able to make $18,000 in 30 minutes. And if you need extra help with your trading, recently I just opened up my mentorship where I'm getting students to come in or sharing with them my knowledge, live trading with them, doing educational sessions. In fact, I spent 3 months making 60 videos of everything I pretty much know. So not only do these students get access to me, live trading with me, charting sessions, but they get access to pretty much everything in my brain. So if you've been struggling with your trading, you've been making the same mistakes over and over again, and you just don't know what to do and you're just lost, this is made for you. If you're interested, check out the link below, and I will see you guys in the next video.